What's up, everybody? Welcome to the Stocks channel. Today the stock market started to sell off, and the question going into the rest of the week is, are we going a lot lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. First things first, we need a huge boom shakalaka because we absolutely crushed it today. And if you watched last night's video, I did a lot of extra explaining of why I thought cash was a very good position. And then today in the Stocks Channel Discord server, we had a lot of very solid short trades. And by far the best of those short trades was shorting the semiconductors ETF SOXX. So as I've said before, when you go into cash, because the risk and reward ratios just aren't there, it really frees you up to have a lot of flexibility on what you end up trading. And we had plenty of time to see some of the setups building in the morning and then take advantage of them and act accordingly with today's price action. So that's what we're doing in the Stocks Channel Discord server. We don't care if the market's going higher or lower. We're looking for the best setups around following price action and then taking those trades and maximizing what the market gives us at any given moment. So no bias and strictly looking at price action. Now, if you have a problem with me changing one thing I say from day to day after I see new price action, then you're already telling me you're a bad trader, because if you get married to an idea and you're not willing to listen to the chart, you are never going to be a good trader. So absolutely, I have the freedom to change my mind every single day when I look at these charts. I might see something that causes me to think a different way. So the first thing I'm going to change right now on SPY is I'm going to delete this arrow. And the reason I'm going to delete this arrow is because I don't think we're going down in a straight line. And you can clearly see that by the way this candle closed at the end of the day. We started down towards the gap fill that I was warning you about, but we found buyers near the end of the day and we actually closed above this support at 507. If I simply sit here and go, well, I drew this arrow last night, which told you we had to go lower, and because I'm married to my idea, I'm going to completely ignore today's price action, then I would never be a good trader, because that's not what a good trader that follows price action does. What a good trader is going to do is say, even if I was shorting, that's my chance to lock profits because we saw strength into the close. And now even if I think we're going lower, there's a very good chance with the close at the end of the day that we put in a lower high before we go lower. That is just a simple read of the price action, because we did not close near the low of the day, which means bulls stepped in and shorts started to cover. And then going into that with tomorrow's price action, the first thing I'm going to be paying attention to is whether or not the bulls can hold that low of support and start to push higher towards the gap fill above at 512. If the bulls can close the gap, then I'm going to be looking for price action to see if the sellers show up and start trying to push down towards the gap at 497. So this is what I told you what moving like water and having no bias looks like. We need to understand what the charts are telling us. Then we act accordingly, and we have no bias and we can move like water, because there's no reason we can't get in and out of a position quickly when something on the chart tells us to move accordingly. So again, this is something that takes practice and time before you're going to master it, but you need to start reading your charts and understanding what they're telling you. So right now on SPY, I like the idea that the bulls can make an attempt to hold this support zone at 505 to 507. And then if we break down below it, that also tells me the market is weak and the bulls aren't there, and then I could continue to short the market to lower prices. But right now, that's not what the chart is telling us, and we didn't get a huge volume sell day, and we did not close at the low of the day. So read that price action and understand what it's trying to tell you, and then look at tomorrow's price action, which we're obviously going to do in the Discord server, and decide if the bulls were able to hold the support overnight. And if they are above that support, you will want to respect the bulls with tomorrow's price action, because they could start to push higher off that low, and we still do have a daily bull trend. So again, this is a bull trend, which means even though I am taking short trades when the market allows me, I'm not going to start accumulating a bunch of short swing trade positions while the trend is still bullish. In order for this trend to really start to break down and no longer look bullish, that's going to be the breakdown below this support right around 501 to 502. So we're just not there to get overly bearish, and I'm not even telling you that we have to go lower. Obviously, this is the bearish scenario of the lower high into the lower low, but there is a bullish scenario where this was a higher low and we continue to push higher to 520. So last night we talked about risk and reward, and the risk reward tonight would be the risk is down here at 597, which is about 2% lower, and the reward is up here at 520, which is about 2.5% higher. So the risk and reward is starting to favor the buyers again, and we still do have a bull trend. So do not be surprised if we just break out through that gap and then go to 520 and pull back at a later date. So this is what it means to follow price action. If you think I care whether the market goes higher or lower, then you're not listening to a damn thing I'm telling you. I could not care less if we go higher or lower, and I will read the chart each and every day to decide how I'm going to trade it. So watch this support at 507, and if we break down below it and we break the low at 505, then we're likely coming down towards 501 to 502. And while we're down there, I think there's a very good chance we just close the gap at 497. However, we're not expecting that with the hold of this support. We'll likely go up to 512 first, and then if we get rejected and make a lower high, then we could look for that lower push. Otherwise, we're going to 520 and making a brand new all-time high. On the NASDAQ 100 triple Qs, we were down 1.79% today, and I'm not going to talk about all of the risk and reward that we just did on SPY. So if you want to understand the risk and reward and how to view the price action, go back to SPY and understand that, and then apply that same exact principle here on the triple Qs. So again, deleting the arrow because the first thing I told you is that the upside reward was not worth the downside risk. And as you can see, that was the right call, because even if we did go to 448, I told you it was a better chance from there that we would still go down towards 425, and that was not worth the long trade. And then today we just continued to collapse. Now it's not all bad for the bulls, because as you can see, they did show up at a rising 20 daily moving average. So just like SPY, I think there's a good chance the bulls make an attempt to push higher tomorrow towards the gap fill at 443. And then if the bears are strong, expect that to be a lower high as we continue lower towards the gap fill at 425. So lower high into lower low would make perfect sense right here. And again, it does not have to be a lower high, lower low. We could break out and hit that brand new all-time high price target right up there around 450. But again, we need to take it day by day. And right now, I still prefer the scenario that we are going lower. But in the shorter term, we're likely going to put in a lower high first. On the Dow Jones, we were down 1.04% today, and this is another reason we need to look at the charts again, because the Dow Jones did the full move I expected to the downside and one swift move, and we hit both of the price targets that I gave you, which was the gap fill at 386, so we can now delete that gap fill, and we did hit the support at 385. Now the difference here, if you look at the Dow Jones, we bounced off of 385 near the end of the day, so we're already seeing the buyers showing back up, which is telling us we're likely going to try to continue to bounce tomorrow. As we bounce, look to see if we put in a lower high below 391, or if we can break out above 391, and that is going to tell you everything you need to know from the price action, whether we're getting a lower high rejection or a bullish breakout. Just stay bullish above 385 and get risk off if we break down below it, and if we break down below 385, we are very likely coming down here towards 380. On the Russell 2000 IWM ETF, we were down 0.96% today, and there is nothing that I'm changing about this arrow projection. I think I'm going to absolutely nail this, which means we're either going to come down here and close the gap at 201, or we just found the support today right around 203, and now we're going to start back higher towards 214. So I can be bullish on the small caps, even if I'm not very bullish on the mega caps, because they are not highly correlated, and it is possible where the small caps go up with the SPY and the triple Qs going lower. So I don't think they have to move together, and I actually hope they don't move together, because that would make more sense to me. So right here, I'm looking for the small caps to show some strength and then come out here and break above 207 and start running to 214. You can get risk off below 200 or risk off below 196. On the ARKK ETF, we were down 3.51% today, and this ETF has a lot of Tesla in it, and Tesla got absolutely pounded today. And there's a lot of other stocks in this ETF that I do not like Coinbase, that also got pounded today. So there's no reason this stock has to go higher like an index. There are a lot of really horrible stocks in this ETF, and that's why I like to track it. If you understand what the crappy stocks are doing, it really gives you a better picture about the market as a whole. So I know a lot of you say, why do you still cover this ETF? And that's your answer. Now that doesn't mean we need to go lower. We could still find support down here at the 50 EMA and then still push higher towards that price target. But you're really getting close to risk off territory now that we filled the gap to the downside, and we could break this critical support right around 48. If we do break down below 47, this will look like a double top rejection that's confirmed below the neckline, and that will easily take us down towards 44. On the VIX, we were up 7.2% today, and the VIX did push up here and test 15, but as you can see, it did start to crush as the buyer stepped in near the end of the day. So look to see if the VIX gets out above 15, or if it was just a pullback before another leg higher. And if it is another leg higher, the VIX should start crushing back down towards 13. On Bitcoin, we're currently trading just below 64,000, and very quickly, and I mean very quickly, Bitcoin did make another brand new all-time high by a very small margin. And then it did start to get this very high volume rejection that I warned you about, because I told you this was the blow off top, and a blow off top usually comes back down faster than it went up. So I do think Bitcoin will come crashing back down towards 52,000 and possibly lower. And the only way I would stay long Bitcoin is if you have a very good risk management strategy, because if this does start coming crashing back down, it's going to happen very quickly, which you did get a dose of today, because after that all-time high, we came all the way back down towards like 59,000. So 59,000 from 69,000 is a $10,000 drop at the drop of a hat. and that could easily be much worse if we start to come crashing back down. So manage your risk tightly on Bitcoin, and if you want to stay bull, that 52,000 breakout is your critical risk level. On Nvidia stock, we were up 0.85% today, which was very surprising because one of our best trades in the Discord server today was actually shorting the ETF for the semiconductors, and that thing was down a huge amount today, even though Nvidia was not showing weakness. That means if Nvidia was weak like the rest of the semiconductors, we would have made even more money on that short trade, but as you can tell, this stock is a honey badger. It just likes to go up no matter what and against all odds because it is in a very powerful bull trend and it does have a very powerful fundamental growth story. So it really has nothing working against it, which is why I tell you it's just not a stock worth shorting. And that's why we chose to short the ETF rather than any individual name. Now with Nvidia, it does have this gap to fill at 823, so I would definitely pay attention to that gap, but it's also down below the 5 EMA. So there's nothing that says we can't go higher and then go fill that gap at a later date. And if we do push higher and we start breaking above 860, the next target is up there at 888. So yes, maybe we go higher and then go lower, or maybe we just continue to go higher and start running towards 1,000. There's really no reason to put a limit on how high this stock can go. And it just continues to break price targets and go higher while it's in this strong bull trend. So you can stay bull now above 840. And as long as it's above 840, you can ride that bull and see if we can go to 888. And if we start breaking down below 840, look for that gap at 823. On Tesla stock, we were down 3.93% today. And we did get that move down towards support at 183. And we even did start to close below it. So you really need to manage your risk here in Tesla while we're below 197 and while we're below 183. If you love this stock and you're accumulating, that's just fine, but do be aware below 197 and definitely below 183, it is possible we push to the bottom of this channel in the low 160s. But for now, I'll leave the projection that if we're above 183, I think we can go a lot higher. But you have to remember that's a if we're above 183 and we are currently below 183. So manage your risk as I always tell you to do. There's no reason you should see an arrow and assume that has to happen. If we break down below a support, you need to manage your risk because that means we could be going lower. So watch that support at 183, which is now likely going to be resistance. And if we break above it, we do have a gap to fill just below 187 and a strong resistance zone right around 193. On Apple stock, we were down 2.84% today, and Apple is now confirming this head and shoulders breakdown because we continued to close below the neckline at 180 and we did not hold that support at 177. And I think Apple is actually a very good long trade right now simply because I think it's about to be a dead cat bounce. All dead cat bounce means is that you bounce to a lower high before you continue lower. And while that is not a bullish thing in the longer term, it is definitely a bullish trade in the short term. So in the short term, you can see Apple is below the daily Bollinger Band for the second day in a row with two gaps to fill above 173 and above 177. So if you don't mind trying to catch this falling knife, I think there could be a very solid trade here towards 173 to 174. And then if we continue higher than that, you could ride the trade all the way up towards 177. However, once those gaps fill, it could be the lower high before we go even lower. And that's where you would want to exit your long positions within the bear trend, because from there, it could be a lower high before we come down here towards 165 to 163. So manage your risk. We are breaking down below that critical risk level at 180. But if you don't mind catching that falling knife, those are the dead cat bounce trade ideas I'd be paying attention to. So jumping back over to the S&P 500, I constantly tell you to watch the price action and then trade according to what the price action is allowing for. And I'm continuing to teach this in my Discord server where every day I look at the charts and I tell you what I think the market is likely going to do based on the chart. This is how you be an unbiased trader, because if you think it should only go up or you think we should only go down, you are going to miss some very profitable trades with some very nice setups. And the only way you're going to master doing this is by not having a bias and learning how to read the charts and understand the price action. So we are absolutely crushing this market, and it doesn't matter if we go higher or lower from here. We have plenty of ways to make money while we go lower and plenty of ways to make money if the market continues to go higher. The key is to manage risk and not have a bias and not care which direction the market starts to move. So if you want to come become a better price action trader and get access to all of my intraday updates and technical analysis, then you can join the Stock Channel Discord server, which you can find out how to join the Stock Channel Discord by clicking on the link in the description of this video. We are absolutely crushing this market, and we are going to continue to crush this market, and it is going to be a very solid trading year. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.